So guys, today had been a very interesting day, and normally I say this for almost every trading session, but I think today we have truly a different variety of a day. And the reason I'm saying this is because I was looking at the stats of the trades that we have been sharing for expiry days, right? So I believe it's somewhere here, right? So these are all the trades that we have shared. We used to publish our expiry day for, I think, for 3 or 4 months we did that, and then we took a break, and then again we resumed back sharing this data from 12th of May. So we have been very consistent about this, right? So I was looking at the stats, and as I was also looking at the data that I have now. During these past 4 months, we have seen a variety of market context, right? So we have seen trending markets, we have seen choppy markets, we have seen market making a U-shaped recovery, V-shaped recovery, W-shaped move, right? So we have seen a lot of variation, but there was one variation that was missing, and today's market action completes that picture, right? So what is that one market context that was missing in all these 4 months? Well, the market context which was missing was when the market moves around in a range, and then in the second half it breaks the range on the downside, and not just it breaks that with momentum, right? It is breaking that with momentum. Now there was one more day, if I'm not wrong, there was one more day where we had a move like this. That was on 9th of June. You guys can go back and check it out, where the context was a little similar. And if I'm not wrong, market basically did this, and then it moved up in the second half, right? So that day also was not a profitable day, and today definitely was not a profitable day. But the reason I'm sharing this is because there is a very important angle that we have to understand about expiry day strategy. And the angle is that, see, any strategy has two aspects that we have to think about. Aspect number one is the risk reward. Means if you are risking 1 rupee, how much do you expect to make, right? And so in this particular case, let's say you're selling a 40 rupee option or 50 rupee option, the maximum that you're going to make is 40 rupees or 50 rupees. If it goes down to zero, then you captured all that premium. But if the market starts to go against you, then that 40 rupee option can become 80 rupees, 100 rupees, 120 rupees, right? So if you see, the expiry day strategy doesn't have a great risk reward, right? So risk reward is not very favorable when it comes to expiry day strategy. So some people may not like that aspect, but what we do like about this strategy is the probability of success, right? It means that what is the probability that if you trade using this strategy, you will end up making profit. And you can see from past 4 months, basically we have been consistently profitable. Doesn't matter what the market do, right? But today market did something which exposed one of the weaknesses of expiry day strategy. And that is what I want to talk about, right? Because it's easy to look at a profit. It's easy to talk about, oh, I did this adjustment, that adjustment, this and that. But it's little hard to talk about losses, right? We don't want, it's like, it's very painful. It hurts to talk about losses. But I think we have to use this opportunity to learn something very valuable. So what is that learning? Well, the first learning is that this strategy will not work if market starts to move with momentum in the last hour, right? So if you see this, and when I say move with momentum, it means that market starts to move very, very quickly in a very short period of time. Now, what happens? Why does the strategy doesn't work when some things like this happen? Well, take a look at one of these options, right? Let's say, let's take a look at this guy right here. So if you had sold this option during the day, anytime, let's say you probably sold somewhere around, let's say 50 rupees. By 2:30, you were planning to make 25 rupees here, right? So for making 25 rupees, the maximum risk that you are willing to take is maybe another 25 rupees, right? 1:1 risk reward, or maybe let's say you are a little bit more we want to have a wider stop loss, you can say, okay, all right, I'm going to go to 60 or 70. But when the momentum picks up the way it did, the 25 rupee option can go to 50, 75, 100, 125. It actually even went up to 200 rupees, right? But again, the question is, this is not the first time that we are seeing a market where you saw options moving this kind of, with this kind of momentum. So what is different? Well, the difference here is that this is happening in the last hour. And what that means is that you only have 1 hour to react. You have only 1 hour to adjust your position. Now, how do we adjust our position? Well, we adjust our position by selling options on the opposite side, right? So let's say if this option start giving me losses, I probably will sell a call option. But what is the premium left on the call option at 230, right? If let's say when this kind of move happened and your stop loss got hit, the premium left on the opposite end probably would not even be 10 rupees, right? So how would you compensate for your 50 rupees of loss by selling a 10 rupee call option? You cannot, right? So this is the most important thing I can share with you, and I want you guys to write it down somewhere, that this is the weakness of the strategy, that in the last hour, if market moves with momentum, the strategy will not work, right? So you have to accept it, right? Just like we accepted our profits, we have to also accept our losses. Now, the $1 million question then becomes, what is the maximum loss we should be willing to take, right? And for that, what I have done is I have come up with a very simple logic, and I will explain that to you. This is how I think, right? This is how I think. So so this is basically the stats of the past 4 months. Now, the total amount doesn't matter. What really matters is the average profit that I have made. So if you see the formula here, I have taken the average of, I think I should add this guy also. The average profit that I'm making on expiry is about 1,10,000 rupees, right? So if I'm trading using this strategy, on an average, when I'm profitable, I'm expecting to make somewhere around 1,10,000 rupees. So the way I think is, for the maximum loss, if I have to decide, okay, if I have to incur a loss using this strategy, what is the maximum that I'm willing to take? So what I do is, I know that this strategy has a problem. And what is the problem? Well, the problem is that it doesn't have a great risk reward, right? So I have to be willing to take a bigger loss here as compared to the average profit. So my thumb rule, there is no exact science here. My thumb rule is that I take the average profit that I make and I multiply that with 1.5, right? So about 1.63 lakh rupees is a maximum loss that I am willing to take, right? So this is a line in the sand. You can have 1.5, you can have 1.8, 9, or you can even have 2 times. Doesn't really matter. What really matters is you need to have a line in the sand that, okay, if my losses start to go beyond a certain point, then I will be getting out of my trade, right? So this is basically my portfolio's maximum loss at any point of time. If I am trading using this strategy, my maximum loss hit this level, I have to get out. There is no way around it. This is like a hard stop loss. Sometimes I can get out a little earlier also, but today was not that fortunate. So I basically had to, get out around this level. So now, as far as I had some struggle. So this is how my PNL was fluctuating. It was not doing great in the morning itself. It was a little bit profitable here and there, but it was not doing great. I believe somewhere I was around 10 to 20, somewhere around that time I was making some 30,000 rupees here and there. Had it been any other regular day, probably would have made some money, but because of course, this momentum on the downside, my maximum stop loss got hit. Put options basically took out all the money, and I exited in loss. But another way to look at it, okay, that's fine. We incurred a loss, that's fine. But another way to look at it is that if I limit my loss to a certain amount, then I can easily recover that in 1 or 2 weeks, right? In 1 or 2 trading sessions, because my average profit is 1,10,000. If I have to recover this loss, it will take me 2 weeks on an average, right? So I think that's basically the main message here in guys today. It's a longer video than normal. I normally don't keep my videos this long. But I hope that the calculation that I have explained, the aspects of the strategy that I have explained, you're going to keep that in mind. And on days like this, the most important thing is to make sure that your losses are not going out of control. Because if you keep fighting with the market, if you keep struggling, you keep selling put options in this particular case, you will only wind up with bigger and bigger losses, right? So with that, I hope that this is only just one of those days which we can overcome, and then life will go back to normal from next week onwards. Okay, so I will see you guys next time.